In this episode of Influencers, Corcoran Group founder Barbara Corcoran.
Well, I see the business as an extension of the person who runs it, short and simple. I see it on Shark Tank. So much money invested in things that make absolutely no sense. I get so much satisfaction out of helping my businesses that I've invested in. Not because I'm making money, although that helps a lot, I find, after a few years. But I love seeing someone with a dream and thinking I'm part of getting them to that dream.
Hello, everyone, and welcome to Influencers. I'm Andy Serwer, and welcome to our guest, Barbara Corcoran, founder of the Corcoran Group, host of the podcast Unusual Business, and Shark, and executive producer on ABC's Shark Tank. Barbara, welcome. Great to see you.
Pleasure to be here with you. Thanks.
So, want to ask you a little bit about this economic environment. Inflation seems to be roaring back, and I'm wondering if people should really take this into account right now, an individual or a couple who are looking to make a big purchase, or should you try to time it and wait it out?
You should move faster because houses are only getting more expensive. It's harder to get your hands on something that you even find acceptable to live with, never mind something you've been dreaming about. Interest rates are still low, although they've been creeping up, and they have promised to continue to go up. And so there's nothing to be gained by waiting whatsoever. Absolutely nothing. So if you weren't smart enough to get into the market 2 years ago, a year ago, the idea right now is get into it as fast as you can if you really want a home. And beyond the home front, I think it's probably the best market I have ever seen for real estate investing. I think the return on investment is phenomenal and has been in so many markets in so many cities throughout the U.S. that it's almost, I don't want to say it can't go wrong, but it's probably the best market I've ever seen in my life. So I think real estate is a champion. And I'm not saying that because that's my gig, because I invest in a lot of stuff, but I'm saying it because I've never seen it more tantalizing and with more promise.
Yeah, I want to pick up on that last point, which is real estate is an investment, not your home per se, but I guess you're talking about like a rental property or something like that.
Rental property or a building with 5 or 6 units or 20 units. The numbers there, the returns people are getting are really surprising.
And why is that exactly? So in other words, because there's such demand and the rates are still low enough to make your cost of capital still pretty good?
A few reasons. One, there was a shyness in the market. People were slow to respond to investment real estate. Now everybody's jumping into it, but it kind of lagged behind all other kinds of investments. So you had a little rest period. Secondly, the rents have been going up nationally. And if you choose your properties carefully, like if you're investing, say, in Orlando, rents are up almost 30%, crazy, okay? So picture what that does to the bottom line. And very importantly, which we all take for granted, like our right to breathe, money's so cheap. And so you can leverage really high. So I even in New York City, which has gone through a really tough period because of all the changes Albany that make it really almost untenable to make money here as an investor. A lot of people have stopped buying. They've moved their money elsewhere. And there's so many opportunities to buy and get very good returns because rents keep going up.
Yeah, I want to drill down in some of those specific markets, Barbara. You mentioned Orlando is hot, New York is problematic. What are some other areas that are either hot or cold or things that are catching your eye?
Well, I should have a chart in front of me because I keep a chart and I can't remember what order they are. But you have Houston is a very vibrant market in rentals, and prices on investment real estate is still not catching up to it from what I could see. You see Pittsburgh is mind-boggling. Pittsburgh is probably where I've really put more of my money in the last 2 years than anywhere else. And the reason for it is people didn't take it seriously. It's not considered a major city, but there's been so much technology that has moved in there. It's got the most educated population. It's got a friendly government that loves development. They have no rent restrictions or rent control. So it's almost like a cowboy land. You could really gallop out of the gate and make money right from the get-go. And that's exactly what I'm happy. I shouldn't even say it because I don't want any competition, but now everybody's discovering it. But the minor cities pretty much with, I now forget which city just announced rent control. Boy, I backed out of that so fast. But most of the secondary cities are doing very well, very well. You can almost get a dartboard, throw the dart there and be okay.
Wow, Pittsburgh, you got the Steelers too. What about New York City though, Barbara? I mean, we're talking about, you know, an extreme luxury market. What are the dynamics going on in here in the Big Apple?
I am telling you that super duper luxury market has totally changed, particularly over the last 3 months. If you're a really wealthy person, you want to make a statement and get a trophy property, you'll be competing with a bunch of other giant egos with a fatter wallet than you have, right? The super luxury market, there's suddenly a shortage of listings. I never thought a year ago I would say that, but there's overbidding on new development sites. On the Upper East Side, there's one building that's going as a starting point, 20% over ask from the day it opened the door 2 months ago. It makes no sense. It was overpriced to begin with, and now it's going 20% over ask. The developers celebrating. The luxury market, I can imagine it stopping. And the new developments, although I see cranes all over town, just can't keep up with the demand.
That's
But
crazy
that's
stuff.
the top end. That's the top end.
Yeah.
Now you
What
have,
about the middle and everything else then?
well, the middle in New York today is get a $3 to $5 million apartment. You're middle class, right? The middle market is a shortage of listings. If you're in a co-op, they don't sell nearly as well as if you have a condominium, just because there's such a preference for the condo product over the co-op, particularly in the last 2 years. Don't know really why that's changed. And if you're looking for a small pied-a-terre for your kid that's going to NYU, forget about it. You might as well just keep them at home and lock them up. It's just too damn expensive. Real estate prices on those units are going up like 20%. If you want to rent something, I know I own a lot of rental buildings in New York where I have a lot of those type of rich kids. The parents guarantee the lease, which makes you feel really cozy at night. But those rents, I mean, it's a bidding war on every single apartment, no matter how high you price it when it comes to market.
And just Hudson Yards doing okay? That thing's getting all filled up now?
It's working on it. Don't ask me about Hudson Yards because I don't want to do them any damage, but it's not my cup of tea, so to speak. Okay.
Yep. It's a big project over there. Let's just
A
leave it
big project over there. Yes.
Right, exactly. And what about the future? Again, sort of broadening out nationally, Barbara. What's in store? I mean, is it so just completely rate dependent?
It's rate helped. If interest rates, I forget how much they've gone up since December, like what is it, 3/4 of a point or thereabouts, I think. It's helped by rate. Okay, it's helped by cheap rates. If the rates go up by 1 point, you buy less house. You have to cut your budget down a bit while while house prices are skyrocketing at the same time. So it eliminates more buyers, but I'm not afraid of that. I almost hate to wish it, but it's almost like we need it. We need to calm it down, cool it off. But if rates go up by 2%, will the bottom fall out of the market? Will houses not sell? No, because it's such a shortage. But does it make fewer buyers compete for those houses? Most definitely. And so rates are always in partnership with real estate. I mean, that's like the foundation of real estate. Can I borrow the money cheap?
Well, it doesn't sound like you're that scared of Jay Powell then, right?
No, I'm not so scared.
All right. Shifting gears a little bit. Crypto, Bitcoin. I think you said it would be perfect for real estate transactions. Why do you think that is? And you really think that could be a routine way for people to pay for real estate?
You know, there's a lot of money passed under the table on high-end real estate that people don't know about. You know, what you see as a sales record is sometimes just not really what really transacted. And that's very clumsy to do and difficult to do. I know cryptocurrencies, because of the nature of what they are, people would feel comfortable. It would help high-end real estate particularly. So I don't see why not. It's efficient. People believe in it. People are trusting it. And I just don't see why that wouldn't become not the norm by any means for the average person, but a big piece of the real estate market. Yeah, I do.
Have you guys seen any of that yet actually in your business?
We have seen 3 apartments trade that I know of. There's probably much more than I know of. We've seen 3 apartments trade in the last 2 years with cryptocurrency.
Wow. All right. It's coming. Okay. And then how about even beyond that, Barbara? I'm talking about the metaverse. Okay. And real estate. So I think you said on Yahoo Finance last month that the real estate deals in the metaverse have hype, have reality, but it could be an opportunity. What do you think the likelihood that a metaverse real estate investment would pay off down the line?
I think, and this is all guesswork. Even people who claim they know what they're doing, I don't believe them. Everybody's just guessing. But if you want to add my guesses to the pile, I think the greatest potential in the real estate space in the metaverse certainly is retail and commercial. Retail, because it's being halfway done already. That some of these high price brands like Gucci, Louis Vuitton are selling virtual clothing as NFTs, and there's a large appetite for it. They're buying. So of course we need the bridge between the actual clothing that I could see with when I go to their little mall. I could hold a purse in my hand and I could buy it, actually order it. That's not far away. So assuming that really happens, that marries, and I don't see why it wouldn't really. I think retail could be the best thing that metaverse could be the best thing that ever happened to retail. I must say so. I also think that the ability to meet with the people that work with you, or ability to meet with anyone in the metaverse, makes the commercial sector very juicy. I really believe that people will do more business in the metaverse in terms of meeting up. And so that makes commercial space very valuable. I think the question that has to be answered is what makes one space more valuable than the other, and why would I pay that and not that? And I think that's going to all come out in the wash over the next couple of years. Certainly, I know it's an odd example, but with Snoop Dogg offering parcels right next door to his house, I took that very seriously, because suddenly there was a differentiation between one lot and another, that someone was willing to pay so much to be next to a celebrity. Now with a celebrity, they're going to do concerts and entertainment. That's a natural for the metaverse. So you might say, well, that's not true of all real estate, but there's a proof of concept that people will bid high and pay a lot of money to be near something else. And that's what real estate is like in our universe. So I see that as filled with potential, that one example. I don't put much credence in the fact that Morgan Guarantee now has, what do they have, the lounge thing? I just see that as extension of their Jimmy's, the ego there, because you get to see a real live tiger when you walk through his space, and then you see a great portrait of the head of the bank. Wow, I really want to buy next to that. Okay, but that's just, I think that's just stealing the headlines and good PR stunt, But I do pay attention to Snoop Dogg most seriously, because that is proof of concept.
All right, so Snoop Dogg, thumbs up. Portrait of Jamie Dimon, maybe not so much. And have you done any transactions, real estate transactions in the metaverse yet yourself?
What I've done is I've put in a bid on well, I shouldn't really tell you, but I think I have it, so I'll take the chance, on the zoo here in Central Park, because I would always love to own a zoo and I can't afford one. So I'm buying that. And I'm also buying the building where I live, which is on Fifth Avenue, because I want to simply brag to my neighbors that, hey, I own your apartment in the metaverse. It's just an ego thing and a lot of fun. So those two so far is what I've been buying. Yeah.
That's crazy. I mean, you think about that. Could I own Steve Schwarzman's house out in the Hamptons if he had? I don't know if he has one, but could I buy someone else's house? I wonder, right?
Yes, you can. Remember, it's new real estate.
Right. Oh my goodness. I mean, it boggles the mind. I'm going to get the White House, Buckingham Palace, right? Why not?
And if you build a house there, you can invite your friends over, as long as they're willing to wear those massive things on their head.
Yes, the Oculus. Okay.
And you don't have to give them anything to drink.
It's its own sort of high, as it were. Hey, let me ask you a little bit about VC and venture capital investing, because it's just been incredible during the past 2 years during the pandemic. How do you explain that, Barbara?
I don't explain it. You probably know a lot more about it than I do, but what I do know is that the deals are bigger and bigger. There's more late stage deals by a lot. I think there were 17, 18 rounds raising $1 billion or more. We've never seen that. I think it's doubled in the last year. Again, approximating these things, but it's really not a business I know much about. What I know about is the mini version of that, which I experienced as a investor on Shark Tank. In a way, we're venture capitalists. We sit there, but and examine businesses and decide where to put our money. But what we always have is more consumer goods. We see very little new tech tools, simply because it's lousy TV. Talk about a tech tool for a half hour on a set and everybody's falling asleep. Talk about the new pizzeria. or the new new anything that's gadgety for a kitchen. Everybody's paying attention at home. And so we see the mini versions of it. But can I tell you, I think there is so much, I see it on Shark Tank, so much money invested in things that make absolutely no sense. And I think on a larger scale, I'm waiting for a lot of this to wash out. There's so much money being thrown and spent by so many companies. And I think only a percentage of those companies really merit that spend and will really make a go of it. I'm
Yeah.
just quite baffled by it. I'm a little nervous about that, but that's your bailiwick. You can worry about that. I'm
Well,
just
there's
going
a lot of money sloshing around right now, as you suggest, Barbara. I think that's really what's driving it. And it's a good segue because I do want to ask you a couple of questions about Shark. So just starting out, what are the key factors that you're assessing when deciding whether a venture is worthwhile?
Well, I see the business as an extension of the person who runs it, short and simple. If I assess an individual as being very capable, even with a bad idea, I always go into the deal and I usually make money because they find a way to make money. They'll find a way to twist it around, deliver differently. They'll totally go into a different business and I'm there for the ride. So the extent I pay attention to the person is the key in a small business. So far as what do I look for in the person? I guess I'm really looking for the same traits all the time. One, I want somebody who looks the part. If somebody loves baking, they better not come in a three-piece suit. I need to trust them intuitively that what they're saying is the truth. And I like a person who says, I don't know, but I'll find out. I think we all like that. And probably as a one personality trait, I put more emphasis on than anything else. I'm looking for someone who has come through some kind of adversity. If I could get an entrepreneur leading any kind of a business who had a father who damned him to hell, couldn't read in school, really had terrible things happen early on in their life, and they're standing in front of me, believing that they could build a business, I always make money on those people. They try twice as hard. So I like investing in previous losers that have the passion to become a winner and really know how to get back up and do it again, get back up. Because that in the end, when I look at the 100 some odd businesses I've invested over the time I've sat in my seat, I can tell you the difference between the ones that have done well and not is the ability to get back up. Not just as an extra, but the ability to really just not blame it on the next guy. Not spend more than a second feeling sorry for yourself and getting back up and doing it all over again. So that's what I'm really doing. I'm people shopping. And it's interesting because, you know, it has helped me tremendously. When I built the Corcoran Group, my major talent was choosing potentially good salespeople. And those are exactly the traits that make great salespeople. Exactly the same thing. So I just continue to, I pretend I'm still choosing salespeople for the Corcoran Group. And when I stay loyal to that, I really don't make any bad investments. So it's gotten very easy through the years, I think, but it's a lot of fun. So even if I didn't make money, I think I'd be showing up in my seat every year anyway, you know?
Yeah, I love that. And the characteristics, the personality traits, that's fascinating. And I guess I wanted to follow up and ask you, so is that different from what Mr. Wonderful looks for and what Mark Cuban looks for? You guys each look for different kinds of things?
Well, I'll tell you, they have different priorities. Mark Cuban looks at anything that he could throw a ton of money at because he's got so much more money than us. I've learned in that show there's a difference between a millionaire and a billionaire. A lot of difference. Okay. So he just likes to like, bam, you want her bid for 50,000, I'll give you 500,000. I'm exaggerating, but he has a lot of money to spend. And what Mr. Wonderful does, I don't even know. It doesn't even make sense to me the way his mind works. But in the end, he winds up getting his hands on a few good businesses. And he's very good at promoting them. He's a wonderful promoter. That's his true gift, I believe, Kevin. Yeah.
Right. What, any big regrets from Shark Tank? Investing regrets, that is?
Yeah, I regret the first 2 years I invested in Shark Tank because I was trying to figure out which businesses were good. In businesses that I had no knowledge of. I know real estate, that's it. But I was trying to figure out, is this a good business? When I finally threw that away on year 3, I started making the right choices by just focusing on the entrepreneur. It made it all so simple. So I wasted 2 good years and trying to be who I wasn't. I wasted those 2 years feeling insecure and second guessing myself. It wasn't any fun. It's only when you're comfortable in your space and you're trusting yourself do you start to have fun. So yeah, I'd rewind and get rid of those first 2 years the way I was managing them.
Right. Hey, do you ever invest in the stock market and in equities? And if so, or maybe even not if so, what do you like? What do you not like? What do you think about
You know what,
stock?
I do not. And let me tell you why I don't. Because I like to know what I'm doing. I love control. I invest in real estate. I could smell it. I could feel it. I know what I'm doing and I make money. Now, any financial advisor that I've ever talked to said it's not wise to have all my equity in real estate of this kind, that kind. I listen and I'm sure they're right in theory, but in actuality, they're not right for me. I'm right for me. I know how to do that well. And so I stick with my knitting.
Let me ask you about celebrity CEOs. And well, Barbara, you might kind of be one, but I'm really talking about, well, I'm talking about you, I guess, a little bit, but Elon Musk and his tweeting and Warren Buffett and Zuckerberg. Are celebrity CEOs good for business? And what can be learned from different models of being a high profile person like that?
Depends who you're talking about now, doesn't it? Elon, you mentioned him. He doesn't want people to pay as much attention to his tweets. And what's he tweeting for? Of course he does, okay? His personal tweets control the value of his business. His personal demeanor and the way he looks and acts and says, kind of a little bit of a wild man, right? People love him. People love him. If you could get your audience to love you, your stock does better. It's as simple as that. What a great high profile CEO does for a firm is they A, get attention, which is very important, especially when the business is young. And B, they get the right attention if it's a love affair. And people will buy with their heart and justify with their head in that order. I believe in anything. I've learned that in my years in business. So people will buy into him and they'll justify that that stock's going to be amazing. And guess what? They're right, because if enough people feel that way, the stock keeps rising. Take a Mark Zuckerberg by comparison, okay? Mark Zuckerberg, I always pronounce his name wrong. Mark Zuckerberg. Somebody's got to tell me how to pronounce his name.
Zuckerberg.
Give it to me again. My office does this all day long. What is it?
Zuckerberg.
Zuckerberg. Yeah, Zuckerberg. Isn't that what I just said?
Kind of.
Okay, he's smart and people respond to him like, wow, he was young, so smart, so rich. But unfortunately, he's also snaky and robotic. And so people don't trust him or like him. Isn't that sad? I don't know if he's trustworthy. I don't know. I don't know a thing about that piece of him. But I can tell you something. Does that work against his value for his business? Yes, it does. It really does, because it's not likable. All right, take somebody like Jeff Bezos. You know what I thought when I saw that he lost all that weight and must have had a great personal trainer, looking buff, and got himself a young wife? I thought to myself, good for his stock. Maybe not, but he looks like a guy who looks like a winner when I see him in the pages of the papers. You see, so I don't think you can underestimate the power that a celebrity head can bring to a firm, or the damage it could do when it's the wrong messaging. But I think today it's almost essential. I don't think it's an extra. You know, there was a time when we didn't elect celebrities for the highest office in our country, but we have found recently that that's a pretty darn good calling card, you know. Same with business. I think things have changed. It's all about marketing, branding, and who puts a face on a brand better than the face.
Right.
It's essential.
I want to ask you a little bit about, well, I guess maybe inequality in our economy and whether or not the deck is stacked increasingly against the little guy in terms of people wanting to start businesses. Tech is so big, rich people are getting richer. Is it that much harder now, Barbara, for someone to start a small business?
I don't believe it's harder for someone to start a small business, harder to maybe to get the hands on the money, but that's always been hard. And the great majority of the small businesses started in America don't borrow money. They work it off, so to speak, like I did, like so many small businesses did. But is there an inequality, which is your larger question across the board? Of course there is. I've never seen a less balanced America than we're seeing right now. Does a little guy have the same shot they had 10 years ago for anything? No. I mean, do they even have the same shot versus a year ago? No, with inflation doing what it's doing. They get a 3% raise and then inflation goes up by 5%. So money buys less to feed their family. I mean, the lower price the worker in America, the shorter end of the stick, and the shorter the stick gets. And for the wealthier people in America, everybody I know seems to be making money. I mean, everyone I know who owns businesses through COVID made more money. I really mean it. I have many very well-heeled friends, and they were complaining all the way to the bank. But that's not true of the people, the moms that were staying at home, minding their kids and gave up the second income because their kids couldn't go to school. There is such a breach between the rich and the poor in America. It frightens me. I think about it a lot. I should have a solution. I do not at all, but I think about it a lot. I think it's very troubling. Yes.
Yeah, I was going to ask you if you had any ideas. I mean, one thing is obviously higher taxes, and everyone's all up in arms about that, but it's a difficult problem to solve, right?
If it wasn't, it would have been solved a while ago. Certainly people are concerned about it and talked about it a heck of a long time, as long as I can remember talking myself.
Right.
It's a difficult problem to solve. Yeah.
Let me ask you a little bit about you, Barbara. You grew up in New Jersey. I think you were the second oldest in a family of 10 siblings. Is that right?
Yeah, that's right. Yeah, it's a good position actually in a family.
Oh, I want to talk about that. You talked about the competition for attention from your parents. How do you think that experience formed you?
Oh, it totally formed me. In my family, most of the kids are all entrepreneurs. They are entrepreneurs for one reason. My father was a working man, worked 2 jobs his whole life, and came home and told us how much he hated his boss, and quit and got fired and quit and got fired. We all grew up not consciously thinking we want to be in charge of ourselves, but we are. That was very important. In terms of getting attention, I'm very good at marketing. That comes from being one of 10. I know it. I had to learn how to speak up, interrupt, and be faster on my feet than the other 9 if I was to get my mother's attention, because it was spread among 10 kids, or my dad's attention. So when you're in a big family, you know how to get attention. You also know how to compete. But the greatest thing, and I'm not stereotyping about all large families, but large families that are led by loving, powerful parents. For those kids, they're the luckiest kids in the world, because you know what it's like, really? It's like growing up in a small town. It doesn't feel like a family. Everybody's got a role. Everybody has a gift. Everybody's demonstrating their gift. You don't get a free ride, you're not helped out, but along the way, you get the confidence that you're fine and will do well in life. So we all walked out of that household at 18. None of us were worried about doing well for ourselves. It was embedded in our DNA by our parents who believed we could. And we were well equipped with the various traits we had developed. Being in that large family with no money to go around and helping out, we all had jobs. I had 22 jobs before I started my real estate business. All of us worked from the time we were 11. Part-time jobs, babysitting, at the kiddie pool, whatever we could get our hands on, because we contributed to the household. So we were well equipped for living in a
right.
Yeah.
And you began the real estate career in your 20s. You sold it, I think, for what, 66 million in 2001.
Yes.
What was the key to building that business, Barbara?
Talent. Choosing the right people, because you have to remember, when you have any young business, no one wants to work for you, and you don't have the means to buy people. You have to hustle somehow to get some willing souls to come work for you. And so hiring the right people. And then the second part is developing their loyalty so they love you. And that's an easy formula. You just love them really hard and they love you back. It's automatic. That's how you build a business. I mean, that was really my great talent, is the right people, and knowing how to build a team for sure, and getting them so that they would like jump off a cliff for me. And they would, because I would have jumped off a cliff for them. And so it was a mutual love affair. That's what built the company. In later years, I was able to build the company much faster because I realized I had a gift for marketing. I could make something small look very big and get everybody to write about it. That's the bullshit factor that you learn in a large family, going back to that, because you have to be very entertaining to get attention. But those are really the only 2 gifts I had. But I was able to choose all the right people around me that had all the other many things that are needed to build a big business, and I always had the right people.
And finally, Barbara, I mean, today you co-host the TV show, a podcast, speeches, you do some endorsements, you have all manner of projects. What is it that you consider important right now in your life? And then even looking ahead, your legacy going forward.
Well, I don't care about legacy because I'll be dead. So what do I care about? But so far as what's important, I think pretty much what winds up being important to all of us. I just really want to make a difference. However I do it, I feel like I make a difference talking to the individual people that call in an 888 Barbara. I think I'm really good at giving advice because I can size up the situation, the person, and give them the right advice. And so I do very well with my Business Unusual podcast, simply because people recognize it as valuable. And I feel really, really good about it. I get so much satisfaction out of helping my businesses that I've invested in, not because I'm making money, although that helps a lot, I find, after a few years. But I love seeing someone with a dream and thinking I'm part of getting them to that dream. It's like being fairy godmother. How many people get to play that in life, right? And so that is, again, another form of helping someone, you know. So anything that I feel like I help someone, I seem to make money on right away. And I seem to get a lot of love back. So I feel very fulfilled and not empty-handed as I get older and older, closer to that grade.
All right. That is the one and only Barbara Corcoran. Barbara, thank you so much for your time.
My pleasure. Nice hanging out with you.
You've been watching Influencers. I'm Andy Serwer. We'll see you next time.
It's been 30 years since the launch of FUBU, the hip hop apparel brand that put streetwear on the map. FUBU stands for Us, By Us, and was started by Daymond John and 3 of his childhood friends from Queens. The company has gone on to have $6 billion in sales, and of course, Daymond John has gone on to become a household name through Shark Tank, books, and motivational speaking. I talked to him directly about his legacy, and he answered with his trademark blend of inspiration and modesty. Take a listen.
I've only done 1% of what the people prior to me have done. I mean, you know, there are a lot of people who risked their lives and lost their lives, you know, and didn't have and marched in the streets until they died and never got to see the freedom that we are allowed in life. You know, I think that, you know, if I can keep educating and keep empowering communities of all colors and showing people that you don't have to be able to sing, dance, or have a very special skill, but if you're willing to get up before everybody and go to sleep after everybody, that you can make it. I think that that is my biggest inventory and my biggest asset that I can help people with.
And then just looking ahead, you know, 10, 20 years from now, what is your hope that folks can look back and say, you know, Daymond John, this is the legacy you left?
10, 20 years from now, there's going to be a young little man or woman who right now they're watching Shark Tank in their little PJs, eating some Captain Crunch. And they're looking at me and they're saying, I can be bigger and better than that man right there. He's showing me the path. And that person is going to be the next Oprah Winfrey or Barack Obama or Steve Jobs or Elon Musk, and they're going, or, you know, Warren Buffett, and they're going to change the world. And they're going to say, my first understanding that I can do it was I watched this guy who came from nothing and he did it. And I said, I'm going to do 10 times or 100 times or 10,000 times better than him.
And I guess they also have to wear that Yankee cap too, which I liked, Marquise. I don't know about you. That was a great conversation you had. Of course, folks can check out the whole thing at yahoofinance.com. There was one thing that sort of struck me during that interview, and I'm not a big fan of doing this, but it paid off for his mom. I know his mom took out a second mortgage on her home for like $100,000 to help Daymond John start his company.
Yeah, it was really revealing. You know, he talked about working at Red Lobster and going into all these banks and asking for a loan. He got shut down time and time again. So it's really that fortitude of believing in himself and his mother believing in him. I know it's super risky to take out a mortgage, and obviously in this case it paid off. FUBU, $6 billion. And I think the biggest thing I took away was just believing in yourself. He talked about waking up before everyone else and going to sleep. You know, make sure you get the sleep that you need, but really believing in yourself. I think that was the through line.
Welcome to A Time for Change. I'm Sybille Marcellus here with Kristen Myers and Alexis Christoforous. What does Richard Branson, Keira Knightley, Barbara Corcoran, and California Governor Gavin Newsom have in common? They're all dyslexic, which means their brains process language differently than most. It's a learning disability. Today, we're going to focus on those types of invisible differences and how best to navigate them in the workplace.
But first, a quick lesson in the term that is at the center of today's conversation, neurodiversity. So we're all different, right? We know that no two brains, no two perspectives or personalities can be identical. Well, that's basically neurodiversity, the wide range in which we all think and act. You're a linear thinker. I'm more out of the box. You take information in best by reading. I prefer listening. Well, today, more and more companies are making room for those differences, including pushing to hire and support neurodivergent people, those with autism, ADHD, dyslexia, or other differing characteristics that don't fall neatly into one category. These conditions, once thought to be inhibiting or distracting, are now being valued by companies looking to foster unique thinking or harness invisible superpowers. Neurodivergent people make up an estimated 20% of the population, and many say they succeeded not despite their differences, but because of them.
And business mogul and Shark Tank host Kevin O'Leary is one of those people. He is dyslexic and calls dyslexia his superpower. But that doesn't mean it's been an easy road for him. Even to this day, he gets very emotional about what it was like to face his learning disability and to overcome it. Here's our conversation.
Well, dyslexia gets misdiagnosed all the time, but the way it manifests itself with a young child is when they start to fall behind in reading and math testing. That's the first time it usually shows up in a concerning way because it's not a small delta, it's a large one. I think I was about 7 years old when it became a real concern to my mother, who was wondering why I was falling behind in school. And her teachers were saying, look, he's just not focused, he's not concentrating. But that wasn't really the only issue. Dyslexia was starting to manifest itself. And for most families, even today, that's where it starts. It's the teacher seeing them. They can excel in other aspects of school, but in reading and math scores, there is definitely a big delta that starts.
So, all right, you're about 7 years old. How did you go to a doctor, or how did you know that you had this condition?
Well, obviously the angst my parents felt was palatable. They were really concerned, and they were wondering what was the learning disability. And I went through a battery of tests. I mean, just everything. But that's what parents do. They try and solve, and they go to different specialists, et cetera. What could it be? I was extremely fortunate at that time, maybe serendipitous luck, but I was living in Montreal, Canada, and there was an experimental program at the University of McGill with Marjorie Golick and Sam Rabinovich, who have become legends in the work around dyslexia. Their research is everywhere. But I was in that first cohort of students. It was really tough because what they tried to teach is they said, look, we know what this is. This is dyslexia. That's what it is. And it manifests itself in each of these students. I think at the time there was 12 of us in the program. And it's different for all of them. For example, one of the things that happened to me, I'd be walking down the street and all of a sudden the universe would shift 90 degrees. And I was lost. I didn't know where I was.
It was many years ago, Kevin, but you still get real emotional about it. Henry Winkler, the actor, has talked about how it caused a lot of friction in his house. There were lots of fights because his parents thought he was being lazy and they just didn't understand why he couldn't focus.
Yeah, that is a problem. But the solution to this is to have, dyslexia is not like other learning disabilities. It's completely its own issue. And the reason that is there are very, very high functioning people that are very dyslexic. The founder of JetBlue is dyslexic. Many others have dealt with it. And the whole point is that at the end of the day, it's the way it was taught to me, the way I got over it was Sam Rabinovich used to say to me, the professor, that he'd sit me down and say, look, you're the only person in your class that can read a book upside down in the mirror. You have superpowers. No one else can do that. I can still do that. I can still do that today. You have to take this like a superpower that's unconstrained and focus it. You have to use it as a tool. And I thought, wait a minute, I have a superpower? That's incredible. How can I use it? And that's really what started working. All of a sudden, I blew through in reading and I started scoring in the top quartile because I felt that, if I had to read the book upside down in a mirror, I'd read the book upside down in a mirror, because no one else could do it. And I said to Sam, listen, am I going to have to read in a mirror for the rest of my life? He said, no. Your brain's advancing. It's advancing. It's figuring things out. And of course, he was right. I'm a ferocious reader now. I mean, I read everything, but I can still do it upside down in a mirror. That's an added feature. It's not a bug. It's a feature. That's the way I started to think about dyslexia. And I also excelled in math. I'm a balance sheet guy. I'm a financier. That's what I do now because of Sam and Marjorie Golick. My message to parents that have dyslexic children is you've got to work with them to at that age to make them understand they're gifted. That's what they have. They have a power. And if they can understand that as a gift.
Kevin, what is it about your personal experience that still makes you emotional after all this time?
Well, it was very difficult for my mother.
Mm-hmm.
It really was. She was very worried about me. The challenge is parents don't know the outcome. They don't know if what the future holds. They're not sure what's going to happen. And that puts a lot of pressure on relationships and families, particularly if one sibling has it and the other doesn't.
Right.
Because then you have a situation where one's excelling right away and the other's falling behind. It just puts a horrible pressure on any family. But again, I say to people that this is a unique learning disability. It's one of the only learning disabilities that can give incredible functionality as the outcome of solving it.
I want to talk a little bit about dyslexia in the workplace. I think there are lots of misconceptions that employers have about dyslexic people. And I'm just wondering, in your personal experience, when you were starting out, did you let potential employers know about your dyslexia? How did you deal with it?
No, that is not a requirement. And I don't think you lead with that because what they want are functional employees. And my attitude about people that have dyslexia is they are super functional in many areas. They are very, very functional. And so they should be measured by that. I don't like the idea that you should put that on your resume or even discuss it. If you've dealt with it and you can read and your math scores are above average again, or even average, life is not just about math and reading. It's actually cognitive skills that matter in the workplace.
Kevin, what, if anything, do you think companies should be doing, maybe your own companies do, to support people with dyslexia or other neurodiverse conditions like ADHD, like autism?
I think as a society, we deserve to support people, that are unfortunate with those disabilities. And there's always in a large corporation, even a small one, a place for people that, there's a job that can be created that makes them feel important and gives them self-confidence. Dyslexia, however, to me, is a competitive weapon. I would hire lots of dyslexics because I know they can excel in certain things in a remarkable way, above the average. And so I would argue to an employer that, this is not a concern, this is an opportunity. And I feel that way about many learning disabilities. People that have learning disabilities are often very, very motivated to perform for their own self-confidence reasons and to prove their worth. And that not every employee does that. Mm-hmm. There's lots of lazy people out there. And you will not find that in people that have learning disabilities. They want to be functioning human beings and provide productivity. And they're myopically focused on it because that's what gives them their own identity. And that's the thing that many employers have figured out. I mean, we're enlightened now. We weren't in the 60s and the 70s. We pushed those people out of the workplace because we thought it would be a competitive disadvantage. That's not the case today. And where you often see companies really support this is in technology, because it's the out-of-the-box thinkers that make companies competitive, the crazy ones, the dyslexic ones.
Some influencers don't say much, quietly making deals behind the scenes. Mark Cuban is the total opposite. The owner of the Dallas Mavericks is known for criticizing referees and presidents alike. His business chops go back to the 1990s, when Cuban co-founded an online streaming company that he sold to Yahoo for $5.7 billion. He has since invested in dozens of startups and continues to do so as a host of the show Shark Tank. Cuban is here to talk about how to pick the right investments, ignoring everybody else's noise, and maybe generating some of your own.
Hello, everyone. I'm Andy Serwer. Welcome to Influencers and welcome to our guest, Mark Cuban. Mark, great to see you.
Thanks for having me.
Mark, of course, entrepreneur, star of Shark Tank, owner of the Dallas Mavericks. And in fact, he's hosting us here today. We're at Dallas Mavericks headquarters here, right across the street.
Yep, right across from the arena.
From the arena, right. So, whole bunch of stuff to talk to you about.
Fire away.
But let's talk about this president thing.
Okay.
You know, that's out there. There are people who suggest that you should run for president. Maybe you have aspirations. I don't know. But it's a discussion point. So what would it take to have you run for president?
I'm excited about next year for the Mavs. It's going to be a great season.
Man. Come on, man. Don't get off track.
I don't even want to get into it. I mean, I did one quick interview and then all of a sudden it blew up. I don't want to feed the beast.
Right.
Like I said, if there's a certain set of circumstances that would push me to do it, but we're not there yet. So if and when it happens, you'll be the first to know, Andy.
Okay, that's very cool. What about the Democratic field? Is there anyone there that you think can challenge President Trump?
Well, I mean, there's now and then there's November of 2020. I mean, if the election were held today, I think Trump would win, right? I don't think that there's somebody that has the momentum or just the value of the incumbency that Trump has. But at the same time, between now and then, I think Joe Biden's got a good chance, and we'll see what happens with any of the field of 97 to see if anybody emerges or if anybody new comes in. I think Biden's capable of beating him, but we're not there yet.
You've been critical of President Trump before. Have you kind of made any peace with him? I mean, you know, it's been a couple years.
Yeah, I get along with him.
Right.
I mean, you know, we didn't have to make peace. You know, like any president, I agree with some things and disagree with other things. It's not personal. There's things I would do differently, and you know, but it was the same with Obama. It was the same with Bush. It was the same with Clinton. That's just the way. That's just the nature of the beast.
So have you talked to him and given him any advice, or what advice would you give him?
I mean, I'm not a fan of the tariffs. You know, if I understand what he's trying to do in terms of battling China, I would approach it differently because I think tariffs are a tax on the American people. But at the same time, I think we have a variety of other leverage points. I'll give you the perfect example. Chinese companies listed on American exchanges have a market cap of more than $1.4 trillion. That's a lot of leverage right there. They're raising money via IPOs, something we can't do in China. I'd shut down all Chinese IPOs. That's the first step. And given his propensity for using Twitter, and just as a kind of throwing warning shots, you know, I would throw out there that we might put a halt on the trading of Chinese listed stocks in the United States. Now, there are American shareholders, but the reality is that long term, the value of the company is the value of the company, but a trading halt would certainly create a lot of disruption for those Chinese companies. And I don't think it's untoward at all to reconsider, you know, treating Chinese companies like they do ours.
Right.
You know, we can't list on their exchanges. I don't know what the SEC is thinking, because given that every Chinese company has a connection in some way or another to the Chinese government, how does the SEC enforce any type of trading laws? Can you imagine if you're a big Chinese listed company and the government, someone high up in the government says, I need to make some extra money. Tell me how business is and what you're going to report. What's the SEC going to do to them, right? And so there's all kinds of enforcement issues that I think come up. And I'm not suggesting that that's what happens now, but we have no idea of knowing that it doesn't.
Have you ever run that by President Trump?
No, I have not.
Or anyone else in Washington?
I mean, I've talked to a lot of people in Washington about a lot of things, but I'm sure it's not something that I think has reached his level.
Right. I want to get into the SEC and about a lot of other things as well, but let's talk a little bit about growing up. You grew up in Pittsburgh.
Yep.
Your father ran an auto upholstery.
We didn't run it, he worked there.
He worked there, okay. So what was that like, Mark, and how did that inspire you?
I mean, my dad busted his ass. I mean, he worked six days a week, left at 7:30 in the morning, got back at 6 or 7 o'clock, lost his eye in an accident doing upholstery. He had a staple break when he was putting some covering on a car seat. You know, it was a middle class upbringing. My mom did odd jobs. You know, they just wanted something better. I mean, my grandparents came over from Russia, and you know, my dad was the first generation. My uncles were the first generation Americans, like my mom too. And you know, like every child of immigrants, they wanted better for their kids.
You know, it's funny. I mean, a lot of people grow up that way, right? But not many people end up like you. So what do you think that's the result of?
I think, you know, everybody's got something that they're good at, and the hard part is just finding it. And I found out early that I was a good salesperson, that I really liked business. You know, like I like sports. I mean, I read everything I possibly could, played sports as much as I could, just wasn't as good as I wanted to be. And business was the same way. I mean, as long as I could remember, I was buying and selling baseball cards, garbage bags, whatever I could find, stamps to collectors. But I was also reading everything I possibly could about business. And, you know, I was that unusual kid that I'd rather read about Ted Turner than go to the movies. And so I think that created a foundation. And my parents didn't always, my dad used to always say, I don't understand what you're doing, but I'm glad you're doing it. And so I had my ups and downs along the way, of course. But I just think that I just put in the time and was fortunate enough to really get excited about business, and that paid off benefits over the long haul.
I mean, you almost have to have that drive. Like, in other words, you can't fake it. You can't like pretend that you want to read about Ted Turner and, okay, I'll skip one movie. Well, it has to be in your soul.
Yeah, I mean, you can fake it till you make it in a lot of areas, particularly if you're working for somebody else. But at the end of the day, if you're going to be great at something, you've got to make the effort to be great at something. Whether it's sports, whether it's physics, math, science, business, whatever it may be, you know, it's not just a natural skill. You've got to learn, and particularly if you're in the technology industry, because it changes every day. You know, when I got started, and you know, after I was a bartender when I first came to Dallas, got into the PC industry, got fired, started my own company, but I learned early on that there was always something new, and most people didn't put in the time to learn it. It's like now with artificial intelligence. Lots of people talk about artificial intelligence. Lots of people talk about machine learning and neural networks. Not a lot of people are putting in the time to take classes or do the tutorials or to learn how to apply it to business, and that's what it takes. And you know, that's just something I've always enjoyed, so I've been fortunate at that.
Now, wait a minute. Are you doing that with AI
yeah,
right
absolutely.
now? What are you doing?
Oh, I mean, I've been on Amazon doing the machine learning tutorials. Right now, I'm going through. I've taken Python online classes.
Really?
Yeah, absolutely. If you go in my bathroom, there's a machine learning for dummies book. I just started JavaScript neural networks. There's a little tutorial where they've got most of the library, brain.js and all the libraries. And it's not, if you have a background in programming, it's not hard. But I'm not trying to be great at that, but I want to understand it. So I understand all the, you know, the nuanced elements of it and how it works so that I have an advantage.
Well, where would that take you? Like with your businesses here or the Mavericks, or you don't even
everywhere.
know?
It takes me everywhere, right? I mean, there's nothing that AI won't impact. As big as having been around a while, I saw the impact of PCs, then I saw the impact of local area networks, then I saw the impact of wide area networks, then I saw the impact of the internet, then I saw the impact of mobile, then I saw the impact of wireless. You know, now I'm seeing the impact of artificial intelligence, and it dwarfs any of those things. And if I don't understand how to apply it to my businesses, I mean, I remember selling PCs and software and walking in saying, you don't need to use that pen and paper on a notepad or a ledger pad. Now we're going to give you a spreadsheet, and by the way, here's a spreadsheet that costs $495, and I had to pay to go get trained on how to sell it, which is crazy now when you think about it. But then we said, okay, now you can play what if. Then we said you can connect these PCs. Unless I understood the technology, how was I going to explain it? How was I going to understand it? Unless I understand it now, how am I going to invest in it? You know, then I got to go trust somebody who says, oh yeah, I know AI, and maybe they do, maybe they don't. And it's really easy just to say, you figure it out. That's just not my style.
So you're building a base of knowledge, and then you think that at some point it's going to pay dividends in terms of...
It already has.
Right?
I mean, if you truly believe AI is going to change everything, how are you going to understand what people are doing to change everything unless you at least have a foundational understanding of it? Now, I'm not going to build a 1,000,000-layer neural network and try to change the world. I'm not going to show you. I'm not going to write a research paper and saying, here's why the lottery ticket approach works, and you can build smaller neural networks with less data and be more, resource efficient. But I can read that stuff and understand that when somebody says, okay, we're building this project and we need this size data set or this size data set, or we need this amount of resources, I can ask questions and understand the answers.
So you grew up in Pittsburgh, went to the University of Indiana for a while, then you said you came here. How have you adopted this city? Why did this become your home, Dallas?
Well, I mean, when I went to IU, I had a bunch of friends that graduated and came down here, and they're like, you got to get your ass down here. The weather's great, the women are beautiful, the economy's good. I said, wait, back up. And I came down, lived 6 guys in a 3-bedroom apartment until I found my way, and have had a blast and loved it ever since.
So how do you describe yourself, Mark? I mean, I said entrepreneur. Is that how you would describe yourself? What do you do for a living?
I describe myself as a grinder. I just, like we talked about learning, that's a grind, but I love it, and I think I've just learned what I'm good at and learned to focus on those things and try to, utilize those skills to now, not just be an entrepreneur, but probably more often now invest in and help other entrepreneurs.
What do all these businesses tell you about the economy right now? What do you think the outlook is?
Well, that's a good question. So some of my smaller Shark Tank companies that resell products are getting crushed by the tariffs. I mean, I've got one that may go out of business simply because tariffs at 10% were one thing, tariffs at 25%, they just can't compete. There's other companies that have bigger and better supply chains where they were more creative and were within 5% of their prices, but now with the tariffs, it's almost impossible, and the uncertainty, it's made it very, very difficult. But beyond that, I mean, business is going well in urban markets, and it's a little bit tougher in smaller markets. Mm-hmm. So, I mean, it pretty much mirrors what you see in the general economy.
Right. Are you surprised at how long the stock market rally has lasted?
No, I mean, if you go back to 2008, it's pretty much on a straight line. When President Trump got elected, it was a little blip. With some of the things he's done, it's taken it back to the straight line. So it's pretty much, where you'd expect it to be. There hasn't been, I mean, like any market, there's going to be ups and downs, but there hasn't been anything dramatic to change it.
Are you concerned about a recession or the market faltering?
I mean, I'm concerned about black swan events, the anomalies that can hurt us. I think in general, the markets tend to just go up, on their own, by their own weight. And so there's no reason for that to change now. Maybe if the trade war extends or something happens with Iran, or, again, there's something aberrational that puts us in a difficult situation, then it could change. But otherwise, I mean, there's no reason to think that, other than stocks, individual stocks, doing what they do, that the market won't continue to go up on the same line that it has since 2008.
You mentioned the SEC earlier, and obviously you've had some issues with them. What do you think about the SEC, just generally speaking?
I think they're kind of useless. I think if the SEC really wanted to make the market safer, they would publish bright line guidelines. So, for instance, there's no specific law on insider trading. There are only legal precedents that have been set as a result of various cases that the SEC has brought. Well, if you run a public company, that's okay because you probably have a general counsel who's training you on doing it, on what you should and shouldn't do. If you're just an investor, you have no idea. You're not a lawyer, and you shouldn't be responsible for, talking to a lawyer before you decide to talk to somebody at a company or make or sell or buy or sell a stock. And I'll give you the perfect example of some of the stupidity. There was a case, and I forget the name of it, where a guy was going to work. It was a railroad company in Illinois, I think. And every day he'd go to work. One day in the parking lot that everybody shared, there was a bunch of limos. And then another day there was a bunch of limos. Mm-hmm. Then another day, the guy literally guessed that the company was being sold. And he bought stock. The SEC sued him. Right. Now the SEC lost, but that's just some of the ridiculous stuff that they do. I'll give you another one. We had a company, Share Sleuth. that did research on some companies, and they found a company that was putting out press release after press release about how great their business was with this new energy solution, I think it was. And we sent somebody out there to just look at the factory, or just called. We didn't even send it. We just called the factory. Nobody answered. Then we called somebody local, I think it was the power company, and said, do you have power turned on for this location? No. Called up somebody local, go look at this building. Nobody was there, right? Company, we shorted stock, company died. The SEC did nothing. Didn't care.
Yeah, so what's the difference, right? Let me shift gears a little bit, Mark, and ask you about economic inequality and Alexandria Ocasio-Cortez and her agenda. What do you think of that, and why do you think people find it so appealing?
I love AOC, right? I don't always agree with her, but I think she's learned the lesson of social media where you get long and you get loud and you get people's attention, and then you deal with substance after that.
But what do you think when she says that the idea that we have billionaires in our society is immoral?
I mean, it makes for great headline porn. I mean, she started a business. Bernie Sanders has a book business. You know, Elizabeth Warren buys and sells houses, or did, right? If they would have had the level of success that I and others have had, I don't think they'd be complaining as much. But that doesn't mean that there's not an income inequality problem. There is. And it's something we have to deal with. I tell, you know, other business people that, you know, the greatest cost to business is social disruption. If people are rebelling and burning things and aren't satisfied with their lives and they're incented to do horrific things, that's the greatest cost of business, and that costs us more. Now the question becomes, how do you deal with
address it? Yeah.
Right. So, I'm not a fan of trickle-down economics, right? Where I don't think that works. I don't think it has worked. Where, you know, the richer people get, the more they make available to others. Hasn't worked. I'm also not a fan of trickle-down taxation, right? The concept that just tax, you know, those who have a whole lot more, then all of a sudden it'll find its way to those who need it. Doesn't work, hasn't worked, won't work. It's not that taking more money. I'm okay with paying more taxes. I don't have a problem with that. Where the issue is, how do you make it work?
Yeah.
Right? How do you get it? Now, the reality is, anybody who's working and getting paid by the hour is going to have a challenge when something goes wrong.
Right.
Right? Do you lose a job? Does the dishwasher break? Does somebody get sick? Is it more than your deductible, or if you haven't covered your deductible yet, can you cover your deductible? If you're getting paid by the hour, it's hard to save money. I don't care if it's $10 an hour, $15 or $50 an hour. It's a difficult position. The only way that people really improve their wealth is by buying a house, condo, whatever it may be, owning shares of stock. And so I think that's where you start to change the rules. I think when you have a company like Uber changed, but who was it that was it Pinterest? Where there's multiple shares, like Snap has got multiple classes of stock.
Yeah.
I think you tax them differently. If every share of stock in a company in the public market is not treated the same, then it should be it shouldn't be, I'm trying to think of the right way without stepping on too many toes. If you have an advantage class of stock, it should be treated as normal income when you sell that stock. Right. If everybody's got the same share of class of stock, then you treat it as capital gains. Right. If you've held it for more than a year. I think you also advantage people if you have a company where all employees offered stock, you give them other tax advantages. Because then, to AOC's point, you're lifting from the bottom up. Trickle down is not going to work. But if you create opportunities where people all have to share in stock, then the disparity is going to decline because everybody's going to go up when things happen. Like when we sold broadcast.com, we created 300 millionaires because 300 out of 330 people invested their stock. Right. So when you work from the bottom up like that, people have a chance to increase the value of their wealth. If somebody's below a certain level of income and they're able to buy a home and you give them more tax advantage, you don't take away their deductions because they're in California or New York. When they have a lower income. Now they did some things to offset, but still, you want people to be able to accumulate assets that enhance, that grow in value, that appreciate. That's how you get people so that their life becomes better.
Okay, let me ask you about America. I mean, People are bitching about America. Is there something wrong with this country, or is it just the usual stuff? I mean,
I think it's the usual stuff.
Yeah.
Right. I mean, now everybody's got a platform, so it's a lot easier to bitch. I call it headline porn. You're only going to get attention. The more dramatic you are, the better chance you have of getting attention. And that's just the nature of the beast. I mean, there used to be gatekeepers to media. Now there's not. And if you're loud enough and either crass enough, or maybe it's a great idea and people get behind it enough, then you're going to be heard. It doesn't make us bad. It's just the game has changed.
I mean, there are problems like our healthcare system, right? How would you fix that? And mass shootings, there's shootings.
Well, I think first, there's a book I read in high school that I ended up buying a copy of. It's called Why Men Rebel. And basically what he said was, when your expectations for your life going forward are increasing, but the reality is diverging from that, and so what you thought would happen with your life and where you are gets further and further apart, then people do things that they otherwise wouldn't do. Whether it's a mass shooting, whether it's, who knows what, cheating, whatever it may be.
Right.
And so, I mean, I think taking care of income inequality and lifting people up from the bottom and creating more opportunities and giving them tax advantages, maybe it's an earned income credit, whatever it may be, then I think you'll see fewer of those events. Other people will say it's a mental health issue. I don't think we've had all those same type of issues, for hundreds of years in this country. I think it's more about when people really get disappointed and they have nothing to lose, they'll do things that people with nothing to lose will do.
Is it guns a problem as well?
Yeah, I would do guns completely differently. You were listening to some of my last interviews, weren't you? I would do guns completely differently. I would go to change the Second Amendment in ways that people probably wouldn't expect. It's not easy to change an amendment, but what I would do is change the Second Amendment so it said, 1, every American citizen has the right to own a gun, period, end of story, written in the amendment. 2, the federal government will never be allowed to ever confiscate that gun from an individual, period, end of story. 3, states have the right to manage the ownership, the purchase and ownership and management of guns owned and held within their borders. So that if you live in a state like Texas, if the law in Texas is open carry, so be it. If you live in Pennsylvania where they're more stringent and they don't want you to be able to have a gun other than in your own premise or under lock and key, or have to do a background check, then that's up to them to decide. And so if we're trying to take a Second Amendment that has been analyzed up and down and backwards and forwards, and it's created its own set of problems, let's update it.
And finally, do you have any notions of where you want to be professionally or personally 10 years from now?
I think...
do you have plans like that?
Not specific plans. I try to put myself in a position now where I can have an impact. You talked about running, there's a variety of ways to have an impact. Fortunately, people open their doors for me. And so whether it's working on healthcare, whether it's working on crazy ideas like changing the Second Amendment, whether it's supporting, talking to the Senator Schumer, he's got a program that creates more doctors, which if you're going to reduce the cost of healthcare, you're going to need more doctors because supply and demand. If we ever want to get to universal healthcare, the United States has got 2.3 doctors per 1,000. Scandinavian countries have 50% more. But those are types of things where I can start having an impact. I can start, spending some money on things that lead to change, helping entrepreneurs, whatever it may be. So I don't have a specific plan. I don't have a specific bucket list, but I hope that all these things I'm learning can lead to some level of change. So we'll see.
All right, Mark Cuban, thank you very much for having us here today.
Thanks.
You've been watching Influencers. I'm Andy Serwer. We'll see you next time.
Salesmanship has a reputation for being aggressive and cutthroat. Just take it from Glengarry Glen Ross.
A, always, B, C, closing. Always be closing. Always be closing.
Love that movie.
Love that movie.
All right, but to be a successful salesman, you don't have to be so aggressive, at least according to our next guest, Robert Herjavec. He is a Shark Tank investor and author of You Don't Have to Be a Shark, Creating Your Own Success. So you're known as the nice shark.
Well, yeah. And I am pretty nice most of the time. But I think the big thing about sales, and by the way, I love that movie.
Right.
Alec Baldwin drives a BMW 850i in that, just as a tidbit. But you know, I love that movie. I know everything about it. That's how people think of sales. They think you have to be overtly aggressive. You have to be pushy. You have to be mean like Mark or Kevin. You have to be in your face. But that's sales 1.0. Sales 2.0 today, the consumer knows too much. The internet has made information available to everybody. It's not about talking, it's about listening to your customers.
And if you listen, then what do you say when you have to open your mouth if you're not going to be a hard pushing salesman or woman?
Sales is about getting and understanding the needs of the other side. And people have a hard time with sales because it's one of the few jobs that is very finite. You either get the order or you don't. There's no gray area. And people have a difficult time with accountability like that.
Yeah. What about when they kind of push you back, though, a lot? I feel that's the gray area. Having tried to sell a few things in my time.
What did you try to sell last?
Well, tried to sell last. That I can't remember, but I remember in college I was selling, trying to get people to sign, you know,
Right. Sign on the line that is dotted. That's a line from it.
And then they would, I'll come back, or maybe I'll do that later, or I'm in a rush. Isn't that a gray area?
Not really. Sales is everywhere. Sales is about getting a raise at your job. Sales is going back in the workforce. Sales is a mom trying to talk her kid into eating vegetables. And sales is necessary for everybody to get ahead in life. That's one thing we've learned on the show after 7 years. If you can't sell, you're going to have a hard time getting ahead.
You're in trouble. All right, give us some tips for entrepreneurs. What is the number one thing that somebody needs to be doing?
In terms of running a business?
Mm-hmm.
Well, the first thing is, I always believe the CEO of any company has to be the best salesperson. So in this economy, it's all about sales. Second part is, you got to have a vision because the world is moving much, much faster. This is the speed of the internet. Speed is getting much faster. Everything's changing, and you've got to be able to adapt. And I think it really comes down to value. You have to have a very, very unique value proposition.
Do these tips transfer outside of the business world?
Well, this is actually a sales book for the non-salesperson. You know, if you're a salesperson and you're a business person, there's lots of book around that. I learned sales the hard way by completely doing it wrong. And I try to write a book for the person that doesn't think they need to be in sales. So you don't have to be a shark. It's a sales book for the everyday person.
You know what? I forgot the last thing I did try to help somebody sell was Girl Scout cookies
How did you
recently.
do?
Well, I'm trying to let her do it on her own, but it's hard to get out there.
So, you know, that's a great example. What is the key selling proposition of Girl Scout cookies? What do you think it is?
What do I think it is?
Yeah.
On what?
What's the value prop? If I was selling Girl Scout cookies.
They're delicious.
No, I wouldn't talk about that.
Really?
Because that's not
what.
It is a good thing you are doing this job and not doing sales. Let me just put that out there.
They're so good.
No, you got to understand the motivation. People don't buy Girl Scout cookies because of the taste. They buy because they're helping somebody.
Those mint ones are so good.
You have to appeal to someone's sense of helping others.
Got it. So
That's
I'm
how you
pushing
sell
it the wrong way. These cookies are delicious.
Yeah.
I need to push it. You're helping me.
You're helping.
Get out there.
Motivation.
And learn.
Help little girls be Girl Scouts.
Okay, I'm going to get her to change her pitch. Speaking of pitches, I just was at a TechCrunch Disrupt over in Brooklyn. So many entrepreneurs and startups.
In tech.
Yeah. I mean, it was crazy. They're just almost vultures trying to give you your pitch and tell you what's happening. Do you feel that we're in a bubble now, or that we are at risk of that in tech?
It's interesting. I was just in the Valley on Thursday meeting with the biggest VC companies in the Valley, from KKR to TPG to everybody. And I think that the problem is not that we're in a bubble in terms of valuation. I think we're in a bubble of oversupply and no liquidity. So you have massive amounts of cash that's been invested and there's no liquidity. I mean, we've had 2 tech IPOs this year. They haven't done great. So you're a big VC, put $100 million into some company. How do you get that money?
You can't get it out.
Right.
I mean, the exit strategies are difficult right now. So that brings us to the equity market. I mean, it has been quite volatile lately, definitely choppy, this range-bound trading that we've been in. Are there any sectors or stocks that you're watching right now?
So confusing. I think there's a big disconnect between the reality of the economy and the stock market. And I think we go through times where they're not on the same path. Look at Home Depot today. The results were great. Consumers are spending more money with them. They're doing a great job, as you said, beating Amazon, but the stock is down.
Yeah.
I feel very good about the fundamentals. I feel very good about small business. I'm seeing capital investment in small businesses increasing. Interest rates may go up, but not enough to shake business confidence. Potentially consumers with mortgages and lending, but certainly not from a capital investment. I feel very good about the economy.
So if you feel good about the economy, do you feel good about retail? I mean, we just brought up Home Depot because that's something we've been talking about, the retail wreck really last week. Do you think the consumer is prepared to continue spending?
I believe the consumer is prepared to spend in certain niches. I think, look at the retail market. Who went under a couple of weeks ago, a big clothes retailer?
Yeah, who did we have? Sports Authority. We had Fairway, a bankruptcy.
But it's very
here.
spotty.
Yeah.
You know, you've got different sectors that are doing well and others aren't. Consumers are going to continue to spend. The car market was up last quarter. I mean, I think that consumers will drive the economy going forward, as they always do.
All right, it's our job then as consumers, and I'm going to change my sales pitch. Thank you very much.
You sold me on that.
We are going to win the Troop Leader Prize next year.
Do you have somebody helping you?
Only an 8-year-old. So, anyhow. All right, I'm Robert Herjavec. Thank you so much. The book is You Don't Have to Be a Shark, Creating Your Own Success.
Thank you.
Thanks a lot.